This is The Wealth Puzzle with Michael Mansfield from the Lynn Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Michael provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is The Wealth Puzzle with Michael Mansfield.
Hey, everybody. Thanks for tuning in. I'm Mike Mansfield with the Lynn Group. Hey, you know what? First and foremost, Merry Christmas. This is Christmas week. I know it's kind of funny timing. I really questioned putting together a video, basically the day before Christmas, just to get lost in your emails. But just wanted to touch base. I also know that I promised that I was done making videos for the year and I'd see you in the new year. But I made that video, first part of last week. And then we had just one doozy of a week when it came to economic data, political news. A lot happened last week. And so I just wanted to check in, kind of explain some of the things that we're looking at, some of the things that were going on, and we'll get right down to it. So obviously I've got the nice Christmas motif background here in the video. So what I've got up here on the screen is I've got the Dow Jones Industrial Average. I just have a 3-month chart. All these white, black, and red lines, show the market, how it's moving. So in the beginning of December, the market kind of made an all-time high. So I put a little arrow on there. So the Dow got up to about $45,000. And then for a couple weeks, it started to just kind of have this steady decline down that we see here. Now, this is interesting because there's almost a current event that's happening right here that no one even realizes. If I was to go and overlay the United Health chart on top of this, so a few weeks ago, when the CEO of United Health got assassinated in New York, a conversation started, and the conversation was something to the degree that, health insurance companies, or we'll say, are problematic. And United Health, the company, lost massive share value. Well, it turns out United Health is a giant company, a $700 billion-ish company, and they lost a couple $100 billion in this short time period. And so as the Dow went down, almost half the losses in the Dow were singularly attributed to the United Health kind of mini collapse. And so that's a very current event. That's not something that we would want to trade on or be concerned about. In fact, if I showed you this exact same time period of the S&P 500, it's just been basically staying flat. The reason this was trending down for those 9 days was because of this United Health little fiasco. So something like that will likely, we'll say, reprice and fix itself anyways. As it went down, you had 9 days in a row where the Dow was red. That was the longest stretch of negative days in the Dow Jones since 1978. And then it culminated last week with this massive down day, right? This big O down we see here. This is where the Dow went down about 1,100 points. So that was Fed Day. That was last Wednesday. That was where the Federal Reserve spoke. And they cratered the market with their words. That was now 10 days negative on the Dow, which put us back to, I think, 1974. So we were making some history. So what happened? So if you watch my videos, if you come to my office, we've been really harping on a theme quite a bit. And that is, the government's been telling us that the economy is fine. The government's been telling us that inflation is basically gone. The government's been telling us that the labor market is tight, yet all of a sudden they're running out and cutting rates. And so when you go read the Fed mandate, the mandate is really two things: control prices, control labor market. So if those things are under control, there's really no reason to be doing aggressive rate cuts. We've made the case that we think the Fed likes rate cuts because it means refinancing our national debt is cheaper. It also means that rate cuts are inflationary. That keeps the tax base up, which gives them more money to deal with our debt issues in this country. And so since last September, here, let me go to another screen real quick here. Since last September, so here's 3 years on the inflation. So we started at this high spot in 2022. Inflation was steadily coming down to, you can see, July of 23, and the decline rate has really petered out. Then when I get to the right side of this chart, kind of September, you can see that's the low spot in the chart, essentially. And since last September, inflation has only gone up. Well, September is also when the Fed started cutting interest rates. And so since September, and really before September, the Federal Reserve started having the theme that, hey, prices are under control, they're going down, our targets are all being met, the labor market is tight, everything is great and good, we're going to cut rates. And inflation has only been, we'll say, tracking up. Well, unfortunately, last Wednesday was perhaps a moment of honesty with the Federal Reserve and the general public. And they said a couple things, and I'm going to paraphrase them the way that I hear them and the way that I perceive them. But in simplicity, they said inflation isn't under control, and the labor market, the labor market is not creating enough jobs to keep the unemployment rate down. So those were two big poison pills for the markets here. Essentially, the Fed's now saying everything that we've promised the market with a certain amount of rate cuts into next year is slowly falling apart in front of us. And so the market wanted to, we'll say, reprice that moment. And so obviously we had this massive one-day decline in the Dow, the worst one-day decline on the Dow in 6 months. Obviously, the Dow is a poor index to use. The S&P 500 is much more objective when it comes to a broader market breadth. But the Dow is very visceral. It's very visual. People love to talk about it. Oh, the market was up or down 100 points. Then what happened on Friday, we had this nice positive update right here. So on Friday, what happened is you had inflation data come out, and it came out barely better. You know, the estimate was that we would have annualized inflation at like 2.5%. It came in at 2.4. So a tenth of a point better. And the market said, hallelujah, look at that. Those rate cuts are back on the books. So we just had a very dynamic week. I mean, honestly, over the last 3 months, you can see the market's barely higher than where it was. But if you zoom out over the course of a year, obviously the market is up pretty dramatically over the last 12 months. So this short-term market movement, even it going down to this red line right here, all of these things are, we'll say, very typical. They're not surprising. They're based on current events. We'll have to see how things obviously play out into the new year here. Separately last week, you know, kind of going back to the last couple of videos I've made, is I've present a little bit of, you know, perhaps debate or a little bit of caution. You know, a few weeks ago, I made a video called It's Still Mystery Meat. And what I was saying was there's always a lot of promises. There's always a lot of rhetoric with new politics. And I think we got a little brief glimpse of it last week with the Congress debating a spending bill. One of the things I've been saying that's a concern for me is congressional control into the new year is so tight for the new presidency that it does seem like it's going to be a little more difficult for them to get anything done of relative to promising stuff. And I think last week was a great example of that. I mean, it was a bit of a chaotic bloodbath trying to get a spending bill done. So, you know, that kind of plays into some of the short-term volatility. These next 2 weeks traditionally are okay weeks in the stock market. They have something anecdotally they call the Santa Claus rally. So we're going to find out really quickly if Santa's going to come to town and save all of our cabooses. But in any case, just wanted to give a little bit of context to what we're looking at, what was happening in the markets last week. I think a lot of it is much more current, if any, and, you know, it'll all get kind of repriced back to normalcy. So anyways, I hope everybody has a wonderful Christmas, certainly a wonderful Happy New Year moment. If you got any questions, you can certainly call our office, 805-500-7035. If you want to get bored and look at our website, it's thelindgroup.com. So anyways, I hope you all have a wonderful holiday. Don't hesitate to reach out, and we'll definitely be getting you some new content in the new year. So best wishes to everybody. And then as always, I'm sitting here scrambling to find my my closing video. Whew, there it is.